Hi everybody, absolutely delighted to have one of the real stars of the claims world join us today in the latest series of the ILC ClaimsTech leadership interviews. Got Andy Warren with us, who many of you will know from his time as leading up the supply chain at RSA. He's now heavily involved in the ticker telematics product, which is creating waves and a lot of excitement in the industry, and also involved with the Ardonna Group. Many people might not realise that Andy started his career as global procurement with Disney, the Disney Corporation, which I thought was absolutely fascinating. But it's an absolute joy to have you with us, Andy. You're looking well. I take it you've been out on the golf course.
Yes, today, yeah, helped the slightly rouged skin, Stu, but yeah, no, it's delighted to be here.
Fantastic. Listen, we'll get the COVID question out of the way first, because obviously, I mean, when we started this series of interviews, COVID we were right in the midst of it all, and I kind of we're hoping that there's that we're coming to the end of the trauma, and we're really hopeful that next month we'll even get together at an ILC lunch with a bit of luck. But what's your experience been of working in a pandemic with all the disruption it's brought with it, and how's use of technology in the pandemic impressed you, or how have you used technology in the pandemic?
I've been refreshingly I'm surprised, probably the wrong word, Stu, but I've been delighted that more often than not, everybody's sort of business continuity planning has kind of come together, particularly in the supplier space. I mean, if physical things like repairing a car and painting a car is very difficult to do online, but from the insurance perspective, it's really worked quite well. Ticker particularly, okay, not a massive company, but pushing a button last March and then having everybody, 80 or 90 people literally never come back in the office again for a year. I mean, occasionally people might hop in to pick up a document, but with decent planning, okay, nobody really knew about COVID up until sort of January of last year. It wasn't even a word sort of being bandied around. It was a threat around Christmas. And then, come February, it was just, a global disaster. But the insurance industry, I think, just as a whole, has dealt with it remarkably well. Certainly compared to, say, banking, where I've been, as a consumer and, a borrower of funds, have been bitterly disappointed. So I think, big tick and thumbs up to everybody in insurance, particularly the IT teams. Support. And listen, it'd be wrong to say it's been seamless and easy. A lot of the bigger insurance companies with bigger kind of challenges, I think, have been one or two have perhaps been shamed a little, but they fixed it quickly. I think they reacted quite proactively. I think the toughest thing, Stu, that I've seen is keeping your people engaged. I mean, call center people, claims handling people at the lower end are, it's a massive earning job. I mean, a lot of people, it's between job. It's a first job, a part-time job, a mum going back to work kind of job. So it's obviously not massively sort of well paid, but keeping people engaged when you're in an office and, you've got the big call center screens and, daily prizes and weekly prizes, all that kind of stuff. It's been fairly sort of difficult for a lot of the businesses. But I think, here we are a year and some on, it's kind of like it's never happened, really. You get claims that I think you still got, people are still frustrated with, the move to chat bots and, dreadful music kind of waiting and not getting any kind of personalization in claims handling. But I think the problems that we had, 18 months, 2 years, 2.5, 3 years ago, we've still got. What I think we've done is focused incredibly well as an industry on keeping people mobile, getting claims paid, getting, whatever the particular kind of catastrophe is. I think for an industry, I think we've done incredibly well, as I say, compared to, banking and one or two other online industries that we will become, massively dependent on. Plus the fact a lot of insurers have kind of responded to paying money back. And I know there's a lot of marketing in that, but they didn't have to do it. They still had big offices in Fenchurch Street to pay for. They still had salaries. They've all been pretty straightforward and honest on furloughing or not furloughing. In my experience, there's not been a huge amount of unnecessary furloughing, and certainly there doesn't appear to have been any massive swathing redundancies because of it, because it's kind of coming back. So amazingly, as I said, 18 months ago, nobody had heard of the word COVID. And here we are 18 months later, where it's effectively changed our lives, undescribably, probably forevermore, and certainly disrupted them in a not good way. Yeah, I think, as I say, I think we can be reasonably proud as an industry for how we've reacted.
Yeah, I think the supply chain's really stepped forward, hasn't it? And I guess it's an endorsement as well for people like you, strategic supply chain providers and leaders, where you don't just buy on price, because I guess those people who bought on price alone and got their solutions, their claim solutions and their supply chains based on price will have been absolutely murdered in the last 15 months.
Absolutely. I think where partnerships have been developed, and I won't name check anybody, but in certain sectors, in the windscreen world, in the salvage world, in the IT world, and in the kind of recovery world as well, there's been some absolute star performers. And but I think that's been because they've gone through a tender and a negotiation, and they've been bashed up on price and all that kind of thing. But there's been enough in there for them to get through this kind of,
go on, Andy Warren. I've never known you be backward coming forward. Name check someone who's done really well. Tell me someone who's done really well.
I'd certainly say our friends at Copart have done a sterling job. They really had, when there was a massive dip, and they've got thousands of trucks on the road, and massive site and auctions and stuff like that. It really was seamless. Autoglass, I think, did an incredible job. Yeah. Kinderton's, Enterprise, Auxilis, I think all of the credit hire companies were literally stuck with hundreds and hundreds of cars, thousands of cars, because not only there was no credit hire because there were no accidents, there were no incoming people. I guess there was furloughs and some redundancies, but I thought it would be absolute carnage in the supply market, where the repairers, they still have repair shops, they might not be getting volume in. In fact, a lot of them weren't getting any volume in. Pretty much, certainly all the groups that I've used and set deals up with they stayed in touch, they stayed professional, they stayed focused, they opened when they could, they didn't flout any rules. So, I'm kind of reasonably proud. Whether you and I played a part in it in the early days, Stu, I don't know, but there seems to be the governance and compliance in the industry around our supply chains to support, particularly the motor world, the legal teams as well. Carpenters have been exceptional through this. As a company that I've used, you wouldn't really know that, if you just landed from Mars, you wouldn't have known there'd been a pandemic, because phones are getting answered, bills are getting paid, claims are getting, solved, recoveries are being made. So it's been, all round, not as horrendous as I thought it might be round about sort of March or April 2019.
Great stuff. So let's go on to matters more positive. So let's talk about innovation in claims. You work for a number of large organisations who've used ClaimsTech to great effect, and actually most have been known for developing great solutions for customers. What initiatives are the ones that you're most proud of that you've been involved with as far as claims solutions and innovation?
I think of recent the kind of the mobility ones. I think if I had to single one out, particularly in the telematics world, it's the fact that, having a road traffic accident, whether it's your fault or it's not your fault, or whether it's a single party accident, you drive into a tree, or somebody drives into the rear view, or it's a multi-car accident, it's traumatic. You're going to be potentially injured, or you could be mobile, you could be off the road through no fault of your own. It might be your fault, and you're used to driving around in a big MPV with 5 kids in there, and then because it was your fault, you're offered a Cinquecento, all this kind of stuff. It's quite traumatic. And the other kind of traumatic part of it is the excess. When you have an excess, everybody will tell you this. It's become a bit of an anecdote in the industry, Stu, but more often than not, people buy insurance with the absolute sort of nailed on idea that they're not going to have an accident. That's why they'll go for the cheapest. They won't go for the brand name necessarily. So whereas we know that's wrong, and a momentary lapse of concentration or a bit of bad weather, accidents happen. But paying that excess and all the uninsured loss recovery, and then all the kind of complication, the stress that comes around with, particularly if you're off the road, or worse still, you're injured, is quite horrible. Everybody watching would have either been caused or been a recipient of somebody driving into them, and it's no fun at all. What I've really liked, been most proud of, is that from a telematics point of view, is using that telematics data, interpreting that telematics data to apportion blame very, very quickly. So you know that you're in a safer place. If you cause the accident, that's unfortunate, I guess. But your insurance company should still be repairing your car, etc., etc., notwithstanding third party, etc. So I think the interpretation of telematics data and being able to proactively go to the customer and say, listen, you were involved in an accident, we know, because it just pinged up on our screen, but it's not a false positive. You then try and capture the third party, so where people are desperately trying to avoid the kind of credit hire world, or at least kind of mitigate the cost. The customer service can be a lot better. It feels less predatory. I mean, if I were to cite conversations that I've had maybe the last year or so, just catching up with some of the smaller businesses I've worked with and some of the customer forums that I sat on, it's the fact that 3 weeks later they're getting a phone call from a solicitor, 6 weeks later from a credit hire company, when they're back on the road or the car's been total loss. So we're not great as an industry at being really, really quick. We think we are, but we're not. Some insurers are better than others, and some some third party TPAs and third party suppliers are better than others. But generally with telematics, the second an accident happens, you can intervene, you can get there, you can be on the scene if you like. And then, with some of the clever stuff that we've got, we can recreate the accident within seconds, actually put the car on there, and within another few seconds, linking into some fairly clever estimatics tools, we can say, well, accident on the side of the road on the M25, we know that our policy holder has been hit at about 60 miles an hour, 70 miles an hour from the side. It's a 10-year-old car. It's a total loss. Instruct the salvage company. Yeah. So there are a lot of advantages, and there's a lot of kind of streamlining that's come for that. And I know you're the same as me. It's not about getting cheaper labour hour or paying less for your Ford parts. It's about the whole kind of end-to-end cost that you're trying to take out people and processes, and double collections and double movements, and sending a high top van to a body shop that doesn't have a high bay oven, that kind of stuff. I mean, that's all the kind of oldie worldy stuff, but more often than not, I think we've in the last year or so, because we've had a chance to step the game up. I mean, certainly the business that I'm involved in Atlanta, the Swinton Alternet business, the claims people there and the operations people there have really focused on how they can work with the supply chain, with the accident management companies, to get people mobile a lot quicker, get the car repaired a lot quicker, and kind of mitigate this sort of umbrella industry that we've created for ourselves of inefficiency, of marking claims up, lengthening hire times, lengthening repair times, just to kind of make more money. And it's often cited by insurance companies, we do what we can to mitigate it. Well, it's not them purposely increasing the time, it's just the inefficiency driving that increase. And that's something that I've tried to kind of work on, and I think we're fairly successful where you can be proactive on the telematics front.
Yeah, great. I'm really interested to hear about the opportunity with telematics and how the data is being used by you guys to create slicker, smarter solutions for customers. That's fascinating. What other industries or sectors do you think we can learn from, Andy? Who's showing the way in terms of customer experience and outcomes outside of insurance that you think we can learn from?
Well, as I say, dare I use the A word, Amazon. They've not done too badly, have they? It's whilst they're an industry leader, an industry disruptor, and let's forget, we're not just buying our CDs and our books from it anymore. Now they operate global TV channels, run satellites, send driverless cars around the world. I mean, they're breathtaking. Personally, if I put my kind of semi-capitalist hat on, I still think it's an organization that probably did being broken up a little bit. Then you could probably say the same about Google as well, I guess. But what they've shown me is the thing that I've had kind of bashed into me over the years in insurance, where customer service and retention, and we've kind of pushed back because we felt, well, it's because it's become a total price play now, and there's no one dominant player particularly in the motor insurance sector. You've got the top 5, 6, 7, 8, 9, 10, and then there's another 50 who do things slightly differently, and they may just pop up at the top of that, the aggregator being slightly lower cost. But I think the the way that Amazon go about it, or so the way that insurers have gone about it is, they try and get the cost down, and then the policyholder has a great year with them, and they don't have a claim, so the insurer's happy, policyholder's happy, and then next year it's so easy for them to go out and put in all their details again, plus 1 more year's no claims discount, and get, say, £10, and they move. So loyalty from the customer end, all right, blame insurers for allowing the aggregators to happen, but they're there, you can't get around it. Price comparison, goes across the world, from restaurants to flights to insurance to banking and mortgages now, but it's, we're just kind of stuck with it. I think the way that insurers have responded to it has kept the service element non-differentiated. I think we do what we have to do. I don't think there's an Amazon approach from any insurer any longer, because is it worth doing it? I think so. What I've been looking for is that the A factor, I suppose, the Amazon factor that keeps people loyal. You just go back, when you think about just about anything now, even food, they've gone into the supermarket world. All right, they're not quite a Ocado yet, but they're certainly making a dent in it. Online drinks, through the pandemic, everyone seemed to be drinking a load more. They've done so well, and it goes without saying, if you want to buy a light bulb or or something you don't buy that often, click, and it's just done. You just can't, and you forget about it. So I've tried, I've explored their model. I've been on a couple of their kind of courses that you sort of self-pay to go in, and they share their philosophy on things, and it's really, really interesting. I'm not sure it's completely sort of transfusible to insurance today, but guess what? Amazon are in insurance. So
yes, I know. Well, they've appeared at a few of our conferences back in the back row.
I did a little bit with them 18 months ago, and they were very. Listen, they've got more money than us poor insurers will ever have, but when they go into it, they just want to go into it so differently. And it was the stuff that we were talking about earlier on, Stu, in telematics. They're there, but they don't really want to release it because they said it's just going to scare the market, and they're not put them off Amazon. So when Amazon go for something, it's already in the market. It's just not mature. They just come in and do it better. And arguably sort of kind of lower cost, and they weren't really I don't really think they were in the mindset of wanting to be an underwriter at that time. But with all their gadgetry, alarms with Ring and all these other companies that they've got stakes in now, they're just knitting them all together. So houses are becoming smart. So, okay, we've all got an app that you can maybe turn your heating up and, or see who's ringing at the door when you're out of the house, but actually integrating that and putting it all together, I'd say they were probably the go-to. Obviously, some of the tech companies again, I think have done particularly well. Dell have in the home space, integrated homes. That a lot of the utilities companies, I think Hive, which is British Gas or Centrica, they're really putting the customer first. And I think now that even the older folk are sort of used to doing everything online because you haven't had a lot of choice. I think the actual back end or the stuff that we're really involved in or really interested in, the claims side, it's still got a way to go before it's kind of tightened up. I still think it needs a person, less so, but I still think people want to talk to a person when it's a catastrophe rather than an order. They want somebody to hear their story, and I don't think as an industry telephony is a strength because it's we tried to get the cost down, so we outsourced it to India or Eastern Europe or whatever, and then there were voice and sort of dialect issues. So we've all been through that as well. So whilst I don't really have the answer, I've sort of been very good at identifying what the challenges are. And some of them are fixable by technology, absolutely. But it's now having the time to shift through all of the InsurTech and find the things that are really kind of relevant. And rather than I think I'll get more offered InsurTech to invest in than to actually sort of try and use. And so many of them at the idea phase rather than the the sort of implementable solution phase. It's getting a little bit sort of a crowded space now.
I want to just come back to the telematics piece, because I know you said something that you're particularly in deep in at the moment, and I've got a huge amount of knowledge on. But one of the questions that I think keeps recurring is what part do you think the manufacturers are going to play in telematics? Because obviously it's increasingly being built into new cars. Do you see the Do you see the car manufacturers effectively building insurance products into their new car packages, or how do you think they're going to use telemetry and the data they're collecting?
I do think they've been. I think they've had a busier dance card to do with things like getting EVs together. Nissan, for example, they wanted to dominate the lower end entry level hybrids and electric cars. So the connected car solution, the telematics, which they've been in cars for 15 years. It's just a case of you got the GDPR thing and the kind of data concerns that you can plug up. Just drop a SIM in there, where it, how fast it's going, who's driving it, where they're driving it, where they're leaving it, yada, yada, all that kind of stuff. And they've not been particularly proactive at doing that, apart from having cars that are Wi-Fi enabled. So, you can get, you don't need to connect your phone necessarily for your Spotify and podcasts and whatever. But I think they've just been fairly slow. Now, back in your sort of head of claims days, and mine as well, we all insured car schemes. We used to RSA, we used to look after Volvo and Ford, to name but a few. And there were always these kind of 7-day drive away schemes, or if you bought a Ford, you could buy a Ford insurance product, but obviously it was an RSA product that would do your kind of claims handling. I don't think when people apply their brand to something, Stu, they want to make money out of it, and I don't think any of them were. So whilst I think you can still get it now, it's become more of a broker space play. But with the conversations, just be a little bit careful what I say, but the conversations that a couple of the large insurers are having, they see their market being, I suppose, not homogenized, but certainly under fire a little bit from the vehicle manufacturers. And so this is the bigger underwriters that are just saying, well, let's try and do something together. But let's not slip into that issue that we had back in sort of 2004, 5, 6, 7, 8, 9, when we were all fighting for Ford and General Motors and BMW, what have you. And they were moving every 3 years, probably like consumers do now, for a lower price or a big commission. I know their play will be, if they own the car, whoever owns the customer owns the accident. And then when in our sort of unique UK accident world, Stu, as you know, you make money from claims, whether you're an accident management company or you're the third party insurer. The cars are marked up, the repairs marked up. The injury world's softened now and it's sorted out a little bit, but there's still money to be had with this umbrella industry that we've created of I don't know whether it's from inefficiency or just lack of attention, but the vehicle manufacturers will finally jump on it in the next 4 years, 3 or 4 years, and start capturing people. So the last big review back on the credit hire review in, I think it was 2000 and I want to say 12, 13, when I suppose the Competition Markets Authority just took a look at it and thought, this is just too complicated. How could we ever unpick this? This is when the vehicle manufacturers, certainly the big ones that I was working with, stepped back and they said, we'll leave it to settle down for a few years. And then we'll use the telematics data in the car, to, work out which direction cars were traveling in when they had the accident and where the biggest impact is, and, the kind of G-force, so we can, strengthen the cars more, better integrity, that kind of thing. They will be proactively capturing the customer and saying, you're in a Ford, we're going to pick it up, we're going to put you in a new Ford, and we're going to bring your car into a Ford garage, not some terrible repairer who's not Ford, and we're going to repair that car for you. And whilst the threat's been there for a long time, I really think it's become a reality, because you remember, when what the old anecdote, nobody lost a job for buying IBM or Ford kind of thing. Well, Ford is just kind of disappearing because they're of their manufacturing processes, transfer costs on vehicles, currency fluctuations, all this kind of stuff. And there's just more interestingly working in the States for a couple of years, as I did after I left RSA, looking at the the amount of cars that we have on the roads here, the different brands and models and derivatives compared to the US. I mean, it's so difficult. No wonder the repairers have such a hard time. I mean, God forbid you'd ever want to keep stock of any particular part in this industry. It would be, it would be impossible. So I think a long answer to a short question, Stu, but I think the vehicle manufacturers are kind of paused. They're very much aware of it, and and trust me, with our friends at Tesla and the people who really ramped up on the EV side of the market, Mitsubishi, Volvo, they're already there. You just have to sign a piece of paper to say, when you drive away, if you have a service issue, we'll contact you. If you have an accident, we'll worry about your welfare and the integrity of your vehicle. We'll contact you. And then back to the fight that we used to have at FNOL. Would you like to use one of our repairers? We'll give you a free courtesy car and a lifetime repair. No, actually, I'll go to a Volvo garage and it'll cost you 3 times as much anyway, kind of thing. That kind of thing.
Yeah, absolutely. No, that makes complete sense, Andy. And what's your take on the sort of the surge in artificial intelligence and automation that's going on in the market? We're seeing a lot of in sort of all up and down the sort of the value chain in claims, whether it be home or motor, that there's AI solutions appearing that we're reducing OPEX, reducing expense ratios. Well, what's your take on how far they can go and how effective they are?
So again, a lot of experience in it, working with Solera out in the States and in Europe with their solution, and then the other big entrants into the market, Tractable and as such CCC. I've looked at all the AI solutions, and none of them are bad. I think we're back to the old sort of Aldertex analogy back in the Paul Tucker days, where that he really made that business dominant. But for the right reasons or the wrong reasons, it kind of didn't matter anymore if the estimate was right, because it was only an estimate, because everybody used it. So if everybody was wrong, then all of a sudden you're right. And I think the thing with the AI piece now is, Stu, that there are quite a few. There's nothing that's dominant. There's I think Aldertex have the whip hand because they have more images to compare their sort of pixelated images to than they've got billions, where the newer entrants are either buying them or they're playing catch up, or they're trying to find the images from somewhere. So I still think that the Solera Aldertex solution has the whip hand. It's the only one that I've actually worked with in garages, and it seems to work well. I think they've all got a chance, because if the policyholder can literally ping the link, take photographs of the vehicle, and then an accurate call could be made from an OPEX point of view, be made where to put that car, it back into a main dealer, franchise, a smart repair, a total loss, whatever the claim kind of denotes. It's a good thing. I think the same as all InsurTech though, Stuart. I think we're in danger of getting too much, and we're losing standardization. And whilst I like accuracy and granularity in claims making decisions, because it's fair and it's cost effective and it impacts the entire value chain, it's far better for an industry where you've got standardization. It's just that sort of bum fight at the moment to find out where the standardization is going to come from. I fancy, because of the platforms that Aldertex have in large insurers, it'll be them. But GT Motive are coming up fast at the moment. Tractable are coming up fast. D&I coming up fast. They guys like you and I are out the hot seats in claims now, and it seems to be a different breed in the claims seats now. They're obviously younger. Sadly, yeah, definitely younger, but it's more, I made a career in claims, as did you, as did a lot of our peers, Ian Thompson and Steve Maddox and co. But it's a journeyman role now. It's a 2 or 3 year job, and then they move on to a COO job or something like that. I mean, I didn't stay in claims because I didn't want to get promoted. I stayed in claims because there was always something to do, and there will always be something to do. But the way they interpret this stuff now, and I think the speed that it's coming to market has actually not gotten better. I think it's got worse. I think people have become a little bit less, I guess, technology and innovation sort of came our way slightly less. We tended to drive it ourselves. when now there's an entire industry funded by seed capital and private equity and wealthy individuals and punters and things like Funding Circle. I think that's the next best thing, or like a drone flying over a roof, so you don't have to put scaffolding up to get up there. It's been going around for 12 years, 15 years. It's not that new, but because people have had no real experience of it, Claims has just been this thing in this big, ivory Fenchurch Street tower that's never really been kind of picked up on by, because it's all kind of experts. It's becoming a little bit more diluted now, and it's accessible to other people. You can literally have a flood at home, pop onto FaceTime and say, look, this is the damage, get someone around here real quick, or the ceilings come down. So no, it's not a £2,000 claim, it's a £10,000 claim. So I think the world has sort of changed, the recipients of change, but the younger breed of claims people, I think, have just got so much to take on board. It's sometimes you just don't know what to go for, you don't know where to start. So what do? You don't do anything, or you take your time to deliberate and everything, and then by the time you actually implement something, it's irrelevant or it's been surpassed. So I think it's actually harder for them than it was for us back in our
there's a lot of opportunity. Andy, I love that. Sorry, the phrase that will resonate for me. The ivory Fenchurch Street Tower is one. I think we need to broadcast that one far and wide. Listen, we could talk for hours. We've got to get you back at some point in time. We run out of time. This has been as always very entertaining, very insightful. Great to hear your views. Always a great learning experience. Thank you so much, and we must get you back soon.
My pleasure. Great to talk to you all. Thanks, Stu.
Cheers, Andy.